Hi, good morning. This video about counting currency. So first of all, I am recording this at 4 o'clock in the morning. So whatever your time, for me, that's good morning. Okay. So what is this accounting concepts? Accounting concepts are the basic assumptions that we are made, that we are prepared to do in accounts. So basic assumptions and rules, and also these concepts are more than rules, right? So here, accounting concepts are the basic rules, assumptions, and conditions that define the parameters within which accounting operates. In other words, accounting concepts are generally accepted accounting principles. So this is the best term that explaining accounting concepts, generally accepted accounting principles. These are not rules. So rules are mean it should legally authorize and it should uh, present as a act like that. But in this case, accounting concepts are the generally accepted accounting principles. Like in our real world, in real life, the ethics that we are following. So ethics are not rules. It's not recorded in anywhere as a legal form, and it's not present as an act. But we have to follow that when we are living in a social life, right? So same thing happens here. Accounting concepts in accounting life. These are the basic ethics, basic principles that we are all accepted and we are following on. So this is not only relevant for the Sri Lanka, this is a worldwide. So if anyone do accounts in worldwide, he or she, so someone doing accounting, that one, that that man or blah blah, have to follow these accounting concepts as their basic principles, right? Accounting concepts provide a foundational framework for accurate financial report and decision making. Concepts ensure consistency and transparency in financial statements, making it easier for stakeholders to interrupt and compare data. So, from country to country, the accounting rules can be changed according to their country's cultural, that business culture. But accounting concepts are harmonized for the whole world, right? Okay, let's move to the accounting concepts. So we have to learn 13 accounting concepts in A levels. These are two books, company accounts and cash flow statements. So each book have 25 questions and with answer book. And I'm all explaining these all 50 questions to my YouTube channel. So if you want to purchase these two books, just send me a WhatsApp, the details. Just send me the message through WhatsApp. So I will send you the other details. And I can deliver any place in Sri Lanka. Okay. So if you want to purchase, just send me a message. Thank you. And please do share with your friends as well about this. And before that, objectives of accounting consist. Main is to achieve uniformity and consistency in preparing and maintaining financial statements, and it acts as the underlying principle that consists accountants in preparing and maintaining business records, and it aims to achieve a common understanding of rules and assumptions to be followed by all types of entities, thereby slating comprehensive and comparable financial statements. Comparable financial statements. A big thing here, comparable. We can compare our financial statement with other companies' financial statements because we all follow up the main basic principles, right? So if I'm doing my accounts as in my way, or the other companies doing accounting as their own way, so we can't compare the things together. So accounting is simply about information, right? Not maths, simply about information. So the one objective is must to compare a financial statement with other financial statements, and from that we can get the explanations and analysis. So for that comparison, accounting concepts doing a main job, a huge job over there, right? So business entity concept. So this concept explains to that the business is different from the owners, which means business and business owners are two separated entities. right? So we have to do accounts from the point of view of the business. So let us assume Mahela Jayawardena. So Mahela Jayawardena have a lot of businesses. So the accountant of Mahela Jayawardena have to do accounts from their each business point of view, not at all together. And he is also doing the accounts from Mahela's point of view as well. So Mahela is also an accounting entity. We can get the accountant. So accounting entity can be a firm, a organization as well as an individual person, right? So here the accountant of the Mahela is doing accounts from Mahela's point of view at one time and the other company's point of view, each company's point of view at one time, right? Not all together. That's what we say here. Business entity concept. So mainly business entity concepts implies us the owner and the business are two separated things and we have to do accounts from the business point of view. So the implications. Own investment to business is considered as additional capital and owner's effect to the business record in separate account called equity and the withdrawals we treated as reduced from the capital, not as expenses, right? So this is business entity concept. So here in A levels, normally they are not asking to define the concepts, but they are asking the implications. Sometimes they are given the situation and they are asking what are the accounting concepts that are relevant to that situation, right? So like that, and sometimes they are given the equation concepts and they are asking the implications, examples that when we are using those concepts in our accounting, right? So you have to get the idea by referring the definition, but the main thing that you have to memorize and you have to get the idea uh, in your memorization is implications, examples and implications of each concept. So that is what testing in the exams, right? Going concern concept. Going concern concept assume that the business will be carried out on an ongoing basis, which means the book of accounts for the entity are prepared based on the assumption that business will be carried on foreseeable future without bankruptcy or interruption. The companies and the firms and any organization can bankrupt in next day. But when we are doing accounting, we are uh, define we are doing accounting based on going concerns concept. So going concerns concept mean we are assuming that businesses are not bankrupt in a foreseeable future. So what is this foreseeable future? Foreseeable future mean not like in 20, 50, 100, 200 years. Foreseeable future mean the future that you can predict, like within 5 to 10 years you can predict that name, but 100 to 200 years you can't predict that. So that is not foreseeable future. Foreseeable future means the future that you can predict, that you can do estimations, right? So going concerns concept means you are assuming that your business firm is not bankruptcy in that foreseeable future. So that's why we can do the depreciation based on the useful life of that proper plant and equipment, and the dividing assets and liabilities into current and uncurrent things, right? So that's so again, implications are the main thing that you have to memorize: depreciation of PP based on useful life and the dividing assets and liabilities into current and uncurrent. So that's we are assuming that foreseeable future. So that's why we can do these things, right? Periodicity concept. So from the going concern concept, then we are assuming that our business is going through for foreseeable future, but we can't do the accounts for that foreseeable future at once. So what we have to do, we have to categorize, we have to periodic that foreseeable future in terms, in periods, and we have to do the accounts for that period. So generally accepted thing is we are doing accounts for a year, right? But sometimes it can be a day, it can be a week, month, 6 months, 2 years, like that. For the necessary, we can decide the accounting period, but normally in general way and especially in the financial accounting, the period the period that we are considering is a year, right? So that's why we are preparing income statements. So statements, not only income statements, statements for that specific financial year, right? Money measurement concept. So this concept implies that we can record only the transaction that we can measure in monetary terms. And this is 100% affecting to the financial accounting. But in modern management accounting, the information that we can't measure in monetary terms, we are also including in management accounting, right? So this is more for the financial accounting. That is more correct for the financial accounting. So this concept states that in accounting can record only the transaction that can be measured in monetary terms, which mean we cannot record non-monetary, so which mean the qualitative informations, right? So implications that let us know that the manage of the Malibon PLC is a good one, but we can't record that good qualities, the work skills and the technical skills in accounting. But we can record the salary that we are paying to that manager, right? So only monetary terms, only the information that we can measure in the monetary terms, but we can't record non-monetary qualitative informations in our accounting. But again, that is more reliable in financial accounting. But when it comes to the modern management accounting, it's changed, right? And the accrual concept. So accrual concept means whether you paid in cash or not, or whether you paid in extra, you have to identify expenses that relevant for your year, whether you paid in cash or not. And for the income as well, whether you received in cash or not, or whether you received an extra, that doesn't matter. You have to record the income that relevant to the year. That's what defined as in accrual concept. So the implications are the accrual implications, expenses payables, expenses paid in advance, income receivables, income received in advance, right? And also sale debtors and creditors, because when the credit sales happens, we didn't receive money at yet, but we consider credit sales are as in sales. So when we are considering that sales as in our sale, credit sales as in a sale, so what's incurred? Debtors, because the credit sales double entry is debtors debit, sales credit, right? Same for the purchasers. So trade debtors and creditors are also the implications, examples, and the situations that comes from the accrual concept, that backing from the accrual concept. Realization concept. So this concept means when you identify your income, you have to identify income after that realized actually. So let's see the examples. These concepts state for recognizing income when selling products and providing services. So when selling products, we have to recognize the selling income at the point of transferring the ownership, risk and the benefit from seller to customer, ignoring cash receipts and stock transfer date, right? So when you are selling, when you are signing the bill, so that's mean you transfer the ownership from you to your buyer, and the risk and rewards of all those stocks you are transferring to your buyer. At that point, whether you received in cash or not, whether you transfer the stock to the buyer, you have to identify sales as in your book, right? And when it comes to the services, you have to identify services at the serve, point of servicing, right? So let's assume that I am teaching you, right? I am teaching you and I am getting money for a month at the first date of the month. But from my point of view, I can't identify that as an income because I didn't taught at yet, right? So when I am teaching you, and that's the point that I should identify the income that I get from you. So that is one for the services, right? So implications, credit sales we identified as income, but sales advance receives doesn't. And stock send or sale return basis, we do not consider it as sales as well. So these are the two examples. And for the services that I Okay, so when the situation given like that, then you have to identify what is the accounting concept that backing for that situation, right? Matching concept. This concept is linked to periodicity concept as well and accrual. This states that the entity need to identify all the direct and indirect expenses against the income generated within the year. In other words, all the expenses should match that incurred to earn the income should identify in your books, right? Implications, deducting closing stock when calculating cost of sales and identify PP depreciations because PP depreciation is a non-cash expense, but you have to identify that as well as in your expenses, right? So let's talk about this deducting the closing stocks. Not only closing stock, when you're finding the cost of sales, any stock that you purchase on intention of reselling, but if you're not using for your current year sales, so you have to deduct when you're finding the cost of sales. Why? Because from the cost of sales, we are finding the real cost that we sold in within the year. So closing stock mean you purchase on intention of reselling, but it remain unsold. That closing stock is included in your purchases. How to find the cost of sales? Opening stock plus purchases. So any stock that include in these two, opening stock and purchases, but if you are not using for your current year sales, you have to minus when you're finding the cost of sales. So that's what backing from the matching concept, because matching concept says you have to identify the true expense that really care to generate your expense, right? Okay. Materiality concept. This concept states that recognizing transactions implies the importance level that each transaction affecting to the stakeholders, especially when you are identifying the expense and asset. That's what where the materiality concept is back, right? Which means the transactions categorizing into assets, expenses, liabilities, income, and expenses impacting from the level of importance that matters for decision making of stakeholders. Let's see, as an example, you are purchasing a calculator for your business. So, purchasing calculator. So, this calculator is a tangible asset, tangible thing, and we can use that more than 1 to 2 years, right? And so those inform about depending on those information, we can treat this calculator as in a non-current assessment, as in proper plants and equipment. But the calculator's amount is a small amount, and identifying calculator as in your non-current assets is not very much important information to your stakeholders. So at that point, we are treating, we are getting the decision what we should treat the calculators as in access to expense. So the level of importance of the to the stakeholders is matters over there. That is what we call in material concept. So purchasing calculator is not an important thing, and it has a small amount of cash, right? So we treated that as an expense. And from the other way around, let's assume that the company give us simple loan, a very small amount loan to your director. The amount is small, but that transaction importance is matters because the company is giving a loan to their own director. So that you have to consider as an asset like that. Prudence concept. This is a way about you are protecting from your expenses before the actual expense happens. If you know that expenses should happen and if you can estimate that reliably, you are doing a provision before that expense actually happens. This is like a security and a protecting layer, right? This concept states that the future uncertainties and risk inherent in business should be considered, identify and estimate accurately and record in the books before those actually happens. This helps to overcome overstating of the business assets, liabilities and expenses and incomes. So any provisions that you are making, what sales warranty, impairment losses and compensation payments, or any provisions that you are making, the concept that backing from those provisions are prudence concept. You are doing a provision before that expense actually happen, right? That is what we call in prudence concept. Substance over form concept. We have to record the things in our accounts, uh, not uh, not based on the legal fact. We have to record the accounting things based on the actual practical way that actually happens. So the best example is lease. Let's see. This means the economic substance of the transaction must be recorded in financial statement rather than just their legal form in order to present true and fair view. So this is useful to ensure that the financial statements given a complete, relevant, very practical and accurate picture of the transactions. The best and only the example, not only the example, but for the LOS, the only the examples that we are uh, referring to from the substance of form concept is lease. When you are purchasing an asset based on lease, the legal ownership is not yet transferred to the business name. Sometimes it's not transferred to the business, right? So, but when you are getting an property based on your lease, the control power and the benefits that earn from that properties comes to your company, to your business. So that's why the leased properties we consider as in our assets, right? The legal ownership is not transferred at yet, but we are using that the control power have with us and the future benefits we are generating from that property. So that property, the lease property, you identify as your asset, right? So that is back from the substance over form concept, not from concept over form concept. Historical cost concept. This is really like ancient thing, that old case. Why? So historical cost concept mean you have to record the transactions at the value that actually happens in the past. So let us say that you purchase a building before 5 years ago. So you purchased the building 5 million. But nowadays the value of that building can be 15 million. But ignoring that, you have to do the transaction, record the transaction and the actual amount that you purchased that in the past. That is historical cost concept. But nowadays we are doing the revaluation. So there is a violations of the concepts in nowadays. So I told you at first, so concepts are not rules. Concepts are the underlying assumptions. But nowadays with the modern accounting and the thing, concepts in sometimes concepts can be valid. So the historical cost concept, what are the things that it's valid? Like as I said, revaluation of property, plant and equipment, right? And recording stock at your NRV value, that is also historical cost concept violation situation, right? This state the transaction should record in the terms of the actual amount at which they occurred at the first place in the past. In other words, this implies to ignore the current market value. Here, uh, I mentioned that PP devaluation and stock identifying at NRV are the examples of violating historical cost concept. Okay. Consistency concept. So consistency is the thing that lacking from most of us, right? Same as me. Consistency concept. So in accounting consistency concept mean we have to follow up the rules, accounting policies, procedures, methods should remain unchanged, right? You can't change the policies, rules, and methods from year to year. By doing that, you can't compare with your financial statements. So you have to do the consistency policies. You have to follow up the policies, methods, and all the procedures consistently when you are doing the accounting by year to year. And that's giving us the chance, the possibility of the comparison, right? So according to this concept, the accounting policies, procedures, and methods should remain unchanged consistently. This ensures the comparability of accounting information with past years or with similar business entities. Last one, disclosure concept. So disclosure concept means we have to disclose anything that can be effect to the stakeholders' decisions in your books. Disclosure principle refers to the concept that suggests that a business should report all the necessary information in their financial statements so that the users who are able, users mean the stakeholders, read the financial information are in a better position to make important decisions regarding the company. So implications in every standard there are the compulsory things that should disclose in notes. Yes. Look those standards, and in the standard it says the what are the things that you should disclose based on that standard, right? So that's it for counting concepts. So discussed the whole 13 counting concepts, short and sweet, and uh, you have to get the definition first. That's correct because uh, clearing the definition mean you are understanding that concept. But especially you have to memorize and get the idea what are the situations that concept are backing, or what are the examples for those concepts that implies you that you are using in your books, right? Because normally in advanced level in Sri Lankan advanced level, in MCQ, there can be 1 to 2 questions from the concept, and also some written questions that also can come from the concepts, right? But more than those questions, identifying concepts mean you are identifying accounting as well, because these accounting are based on these principles. Our whole lives are based on our own principles. Like that, in accounting, these are the principles, the underlying principles, the worldwide underlying principles. So, identifying and understanding these concepts mean you are taking the first base of understanding accounts and goes. So, in my opinion, in our advanced level as well, we have to teach first these accounting concepts first. This should be the first lesson, right? So identifying accounting concepts mean you are identifying the first base of your accounting subject. Okay, so that's it for this lesson. And please do comments because comments motivate me, and that is the only satisfaction that I can get. And please do share because in my channel, I did mostly in single medium. So these are the first lessons of English medium. So most of the English medium students are doesn't know about this channel and about me. So please do share, please do comment, and please buy my books, my workbooks, and do that as it works to practice more. So yes, that's it. And I will upload more contents, more theory sides of the accounting as well in English medium too. Okay, have a nice day.